Imagine waking up to find your bank is gone. No warning, no letter, just closed. It sounds impossible, right? But it's happening right now across the country. And your bank could be next. Stay with me. This affects everyone with a bank account. Banks are shutting down branches at an alarming pace. This past summer alone, 74 branches closed in just 6 weeks. That's more than 2 branches every single day. And these aren't just small local banks either. Chase, Bank of America, Wells Fargo, all closing locations. Small towns are losing their only bank branch. Elderly customers can't access their money in person anymore. Now here's the shocking part experts don't talk about. If this trend continues at the current rate, the last physical bank branch could vanish by 2041. That's only 16 years away from now. The question isn't if your branch will close anymore. The question is when. Let me take you back for a moment here. Back in 2009, bank branches were absolutely everywhere. For most of us, that was the only option available. You'd walk in, talk to a teller, deposit checks. Need a loan? You'd sit down face-to-face with someone. That personal connection built real trust over time. Fast forward to today, and everything has changed dramatically. Most people now use apps to check their balances. We pay bills from our phones at midnight. We deposit checks by simply snapping a photo. The pandemic accelerated this shift even faster than expected. Once people realized they could bank from their couch, many never went back to a physical branch. Meanwhile, those beautiful bank buildings sit mostly empty now. During peak hours, maybe 10 customers walk through the doors. The rest of the day? Even fewer than that. Banks are paying rent, utilities, staff salaries, and security. All for buildings that barely see traffic anymore. And running a single branch? That's incredibly expensive. So here's exactly what banks are doing instead. They're closing physical branches and shifting resources to digital. That neighborhood branch you visited for 20 years? It's being replaced by an app on your smartphone. Some banks are consolidating into fewer, more specialized locations. Chase, for example, closed branches but announced something interesting. They're planning to open 500 new branches by 2027. But these aren't the old-style banks you remember. Instead of rows of tellers handling everyday transactions, they're more like advisory centers for complex needs. Mortgages, business loans, financial planning. That's the new focus. Bank of America is following a similar strategy too. They've committed to opening 150 new branches soon. The idea isn't that branches disappear completely. It's that the role of the branch is transforming. Some banks are trying mobile branches, basically buses with tellers. Others are installing video teller machines at ATMs. You talk to someone on a screen instead of in person. The push is clear. Move everyday banking online entirely. Banks have several reasons they point to for this. Our customers prefer digital banking now, they insist. And the data does seem to support that claim. Most people use their phones for routine banking now. Branch visits have dropped significantly since the pandemic started. From a bank's perspective, why keep expensive branches open? If customers aren't coming in, it doesn't make financial sense. There's also serious financial pressure behind these decisions. Higher interest rates and inflation eat into profits quickly. Slower economic growth means less revenue coming in overall. Cutting costs becomes the top priority for survival. And branches are expensive. They're often first on the chopping block. Then, there are the regulatory costs to consider here. After 2008's financial crisis, new rules were implemented. These protected customers, which was absolutely necessary. But they also made operations more expensive for banks. Big banks like Chase can absorb those costs easily. Small community banks struggle much harder to survive them. So consolidation becomes the only viable option for many. Banks argue this is just following where customers are going. But consumer advocates see this very differently. They're raising serious concerns about who gets left behind. First, let's talk about access to technology itself. Not everyone has reliable internet or owns a smartphone. For millions of people, digital banking isn't even possible. Elderly customers especially struggle with apps and online security. They've banked in person their entire adult lives. Now they're being forced into systems they don't understand. Imagine being 78 years old without internet access. Your closest branch is suddenly 30 miles away now. You don't drive on highways anymore for safety. How do you deposit your Social Security check? This is the reality for people in rural areas. Small business owners face completely different challenges too. They need to deposit cash regularly throughout the week. Without a local branch, that becomes nearly impossible for them. Surveys reveal something interesting that banks might ignore. Nearly half of Americans still prefer banking in person. More than 70% believe the system needs serious reform. That emotional connection, shaking someone's hand, seeing their face, matters. In finance, trust is absolutely everything that matters. Losing that personal touch feels like losing trust itself. Critics also question the recent policy changes made. The Trump administration rolled back some disclosure rules recently. They argued it would reduce red tape for banks. But critics worry it lets banks hide problems longer. Let me show you what's really at stake here. Between 2019 and 2023, something alarming happened nationwide. Hundreds of new banking deserts appeared across the country. These are areas with little to no bank access. More than 750,000 people were affected by this change. And it's not just hitting rural areas either. Some suburbs and specific communities are suffering the most. In these banking deserts, the average distance to a branch? 30 miles. That's not realistic for most people, especially if you depend on public transportation or fixed income. Earlier this year, regulators made another concerning change. They reversed a 2023 update to the Community Reinvestment Act. That update had pushed banks to serve low-income communities better. The rollback means less pressure on banks to stay. This could widen the gap between communities dramatically. Some areas will have easy banking access forever. Others will be completely cut off from the system. For small business owners, losing a branch creates ripple effects. Longer trips for deposits mean lost time and productivity. Harder access to credit can cripple a small operation, and that impacts the entire community's economic health. When a bank leaves, property values often drop too. Local employment decreases because businesses struggle without banking access. The racial equity issue cannot be ignored here either. Certain neighborhoods are losing branches at disproportionate rates. This creates systemic barriers that trap communities in poverty. Without local banks, people turn to check-cashing stores instead. These predatory businesses charge fees up to 10% per transaction. So what do banks say when confronted with all this? Most major institutions have issued reassuring statements repeatedly. We remain committed to serving all our customers, they say. We're investing more than ever in accessible options. They point to those mobile banking buses in rural areas. They mention the video teller machines as viable alternatives. Chase emphasizes their plan to open 500 new branches. Bank of America highlights their 150 new locations coming soon. But remember, these aren't traditional branches with tellers anymore. They're advisory centers focused on specialized financial services. Experts predict the last physical branch could disappear by 2041. That timeline assumes closures continue at their current pace. Meanwhile, regulators are watching these changes somewhat closely. The government requires 90 days' notice to regulators before closure. Customers must receive at least 30 days advance notice. But here's the thing. Those rules don't stop closures. They just make sure banks follow the proper process. And for people in smaller towns, that notice doesn't help. Some financial experts believe this is inevitable progress. Others warn we're creating a two-tiered banking system entirely. One tier for digitally connected people with resources. Another tier for everyone else who gets left behind. Okay, so what can you actually do right now? First, don't panic about the safety of your money. Your deposits are FDIC insured up to $250,000. Even if your bank closes, your money remains protected. Now, here are practical steps you can take today. 1. Call your bank and ask about their closure plans. They're required to notify you 30 days before closing. 2. If you're comfortable, start learning online banking now. Get help while in-person support is still available nearby. 3. Look into credit unions in your local area. They're closing branches at much slower rates than big banks. Community development financial institutions are stepping in too. These mission-driven banks often keep branches open longer. They also provide financial counseling and small-dollar loans. 4. If you're elderly or disabled, ask about accommodations. Banks must legally provide accessible services to everyone. 5. Contact your representatives in Congress about banking access. Tell them this matters to your community's economic health. Public pressure has reversed closure decisions multiple times before. 6. Support local banks when possible over national chains. Community banks have stronger records of staying in neighborhoods. And share your story. Your experience matters to this conversation. Have you had a branch close near you recently? How did it affect your day-to-day financial life? Look, the future probably looks a lot like retail. Amazon didn't kill physical stores. It changed how we shop. Digital banking won't end in-person banking completely either. It's reshaping it into something different than before. We'll see fewer but smarter branches focused on relationships. Technology will handle the heavy lifting of everyday transactions. But there's real uncertainty about access gaps growing wider. Certain communities risk being left completely behind. That's why paying attention to these trends matters now. Banking isn't just about saving money or convenience. It's about people's lives, communities, and sense of security. You're not powerless. Knowledge is your first step forward. We'll keep following this story as it continues developing. Thanks for watching, and don't forget to share your experience. See you in the next one.